Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como with Ireland Como Lafoy. Today is the 23rd of June, 2023. Now, we're going to lead off today with a little bit of a geopolitical story, the one that I'm assuming that you probably know we're going to lead off with, but we just wanted to kind of make a mention here that on this channel, we're not looking to wade into politics or partisanship or anything like that. Just report on the facts and particularly report on how those facts may or may not affect the grain markets, particularly Canadian grain markets. So as we go through today's market action and into the commentary today, we want to look at it through that lens. We're focused on the grain markets here. Just to do a rundown of what happened in markets today, we saw $17.70 of losses against the November canola. That brings it down to 7.25. You know what? I'm going to make sure that you are seeing what I'm seeing here. All right. So 1770 down on canola, 725 is where it settled today. Minneapolis wheat is down 11 at 664.5. Kansas wheat is down 13.75 at 565. Chicago wheat down 14 at 569.5. Beans are down 14 at 1046.75. Bean oil is off cent 35 to 53.75. Corn down 9.5 to 419.25. The Canadian dollar shows small losses today, but over time that has been a little bit bigger of a loss. 72.79 is where we're trading the Canadian dollar now. So we've punched below the 73 range. Live cattle lost about 72 cents a hundredweight at 209.37. Feeders gained actually 35 cents at 302.80. All right. I would say that from a grain market perspective, that the attack on Iran over the weekend did rattle markets. We could be seeing some effects from this in today's grain markets. Overall, though, this market has been trading really interestingly. Crude oil, for example, we'll show you a chart here in a moment. Crude oil has been very, very volatile, as you can imagine. The Strait of Hormuz is very important in the crude oil trade and logistics. As far as grains go, that shipping alleyway isn't as important, but some potential risk-off trade may be important. Perhaps we're seeing some of that in today's market. We didn't see that necessarily in equity markets, though, so it's not widespread, and may mean that today's losses weren't necessarily a result of geopolitical risks that are happening in the marketplace. But we are going to lead off with that today. Here is crude oil. We ended the day in crude oil down almost 6.3%. We actually started the day up, or at least it traded up to a 5.4% gain. This is the August futures contract, traded up to or a little more than $78 a barrel. We did see a $9 per barrel range from high to low today. When you look at this candle here, I'll circle it here. This is just, oops. Geez, it looks like I'm having a seizure here. It looks like a really volatile day, which indeed it was for crude oil. Now, is that affecting some of the other markets, such as vegetable oils? It is possible that it is doing that, but there are some other factors at play here. We'll go through that. Here is November canola today, as I said, down 1770 or 2.3%. Does that break a whole lot of technical signals yet? No, we got the 20-day moving average below there. We've got the trend line below there. Markets do correct. Canola particularly has been correcting quite deep when it does. Here's an example here. Here's another example of that. But we continue to kind of trend higher here. So is the chart broken? No. Does it show a little bit of warning signs? Yes. Why is this happening? Again, could be a little bit of the conflict, but we also saw some significant rains across the prairies over the weekend. And I shouldn't say across the prairies. It was not widespread, or as widespread as some would have liked, but we did see, a couple inches in some of these areas of Alberta, into central Alberta and into north central, or into the western part of Saskatchewan. Lots of canola and things like that is grown up here, though, and that missed a lot of the rains. And I know some farmers up there who got little to nothing over the weekend, which is disappointing. Again, it was spotty in southern Manitoba as well. So the rains weren't necessary. I think the rains did help to alleviate some of the bullishness in this marketplace. I think we did sink today largely because of the rains across or on the prairies. It wasn't as widespread as what we would like. So there still is lots of risk pockets in the prairies as well. But rain makes grain. And anytime you get a pretty big system, as this was, move across the prairies, whether or not it hit your farm, is kind of one of those unfortunate things when you see no rain and you see the price go down. That could be an issue. But for all those who did receive rain, that's a great sign. I know you'd rather have better crops than have to harvest crop insurance or even high prices and lower crops or lower yielding crops. So overall, this was a beneficial rain to the Western Canadian prairies. We would have liked to seen a little bit wider of a pattern, but hey, we'll take what we can get for at this point anyway. However, it wasn't just the Western Canadian prairies that caused some problems for canola. Here's July soybean oil. It was down 2.3%. Very similar, very similar losses to canola. Uh, we saw losses as well across palm oil, soybeans proper, um, rapeseed, a lot of the oil seeds. So a lot of those things were under pressure today. And overall, it was just a risk off or a long position reduction day for the oilseed complex. All right, moving into wheat now. We also saw losses in the Chicago, or in all three of the wheat pits today. Chicago and Kansas, very similar, down 2.4% in Chicago, or 14 cents, as I mentioned. Kansas was down as well, 13.6 cents, which is about 2.4% as well. This brings kind of Kansas back into the channel, perhaps, which we were hoping that this breakout meant that we would stay above the channel. But we did see a test of the 200-day moving average and a fail. So again, wheat is not outright bullish. We did see this rally in a bearish style of market, and there's also another grain factor that's coming into this as well. Kind of moving back to spring wheat here. Here is the spring wheat areas in drought. This actually is increased this particular week. So now we see 22% of spring wheat in drought. Last week we saw 20%, so it did get a little bit worse. I got crop condition ratings coming here in a second, just fresh off the press. But first, we'll get into the futures here. December spring wheat, again, down as well. Again, the chart isn't broken. We probably did test some. I didn't put a line on here, but if you were to draw a nice, see again, wonderful artwork by myself here. There's a trend line here. We didn't break that. The 20-day moving average is crossing the 200-day moving average. That's still a bullish signal overall. Okay, I think just a couple more futures charts I wanted to show you here. Here's the Canadian dollar. As you can see, we've been kind of talking about it, testing near 74. It has continued to grind lower and now is below 73 cents, 72.80. So we're just seeing the Canadian dollar move out of favor. There is some risk off money coming into the US dollar at this time, and that is continuing to put pressure on the loonie. That could be a good, that could be a good thing for some of our grain prices. That does help support canola to some degree. It does help support wheat basis levels, soybean basis levels here in Canada. But today's losses probably outweigh those of the Canadian dollar at this point. Again, here is August soybeans. We sunk down to 1062. It did kind of make double tops here at 1080 or 1080-ish. That's a little bit concerning. We do have a cluster of moving averages here, but they have converged, which signals that this market may be more neutral than anything else at this point. So just kind of wanted to update you on that chart. Here's the big one. Here's July corn. Might be another reason why we saw wheat get pulled lower today. July corn punched to a new low today, down to 419, or closed at 419 and a quarter. That's new contract lows for this contract. It's very, very weak, and the rains and some things are affecting this particular commodity harder, and I think this may have pulled on wheat today as well. All right, getting into some of the weather charts. Again, here is the forecast for the next 120 hours or 5 days. Looks pretty spotty here. This kind of blue area here is where an inch of rain kind of kicks in. So from the, the turquoisey blue into the lighter blue, uh, in here. So as you can see, an inch is still very spotty. That area that I'll call dry may experience some rain, but we still need more in this area, and it looks relatively spotty there too. So we saw a good shot over the last 3 days or so. It's not looking quite as good in the next 5 days, but some areas will get great rains, some areas will be void of rain. It'll just depend on what happens with these systems. As far as temperature goes, we are seeing pretty moderate temperatures. I mean, we're talking, mid 20s for much of the Canadian prairies as highs over the next 7 days or so. That's nothing to create any risk. So again, low risk with some rains coming in. We may continue to see some pressure coming into these markets. Just to show you kind of the U.S. picture here, big corn and bean country up in this area where there's lots of rain expected over the next little while. So that could be pressuring corn as well. Um, just overall, not a lot of risks other than the conflict in the Middle East that we are seeing right now. Getting into crop condition ratings, again, these are hot off the press. We saw corn crop conditions lower from 72 to 70, 70 good to excellent. That is that could add some support, but I think it may have already been worked in, and the forecast may outweigh some of that as well. We did see about a stay in soybean conditions as well. Where we are seeing some reductions is in winter wheat. However, this is under harvest at this point in time. Much of it's under harvest. So the market may not be paying as much attention to winter wheat crop conditions as we would like. And the spring wheat crop condition ratings dropped from 54 to 52, good to excellent. So we are seeing a reduction overall in US spring wheat conditions. It is now below average, or it has been below average for much of the year, but it came up and tested average and then fell back below. So again, we are seeing a little bit better performance on the spring wheat than we are on the winter wheats. And, this could be a reason. There is some stresses here. There is also some stresses in the Canadian side as well. And of course, a much lower acreage base than normal. Winter wheat harvest is underway. We now have 19% of the winter wheat crop harvested. That's quite a bit below average, though. We saw 9 points from last week to this week, but 28 is the average. 28% harvested is the average at this time of year. So we're only at 19, and that is a bit of a risk factor as well. All right, if you haven't yet, subscribe to our premium content. We send out a weekly report every week. We send out hot takes when something interesting happens in the markets. We send out morning commentaries every day. All of this delivered to your inbox on the regular. And we hope you subscribe. This is how we put food on the table around here at Ireland Como Lafoy. So thank you very much for tuning in. We will see you again. Actually, I should say, we may not be making video content over the next couple of days. I'm flying to Alberta to do some presentations and meet some of our consulting customers. So for those of you who are watching this, I look forward to meeting with you and catching up with you and getting your ideas on what this market has to offer as well. So we'll see some of you this week, Wednesday. We may even see some of you tomorrow and Thursday as well. So I look forward to that. And if I don't get any videos made, we will see you again on Friday. Have a great day.